start the recording, and I'll make the presentation bigger so we can see it. So if you were with me last week, we talked a little bit about some of the differences between supplemental security income, SSI, and Social Security Disability, SSDI, and just how they differ. And today I want to talk to you a little bit about people who are on SSI, supplemental security income, and what happens if they go to work or they have other income. We're going to talk a little bit about how Social Security calculates that other income and how it would impact any benefit the client was entitled to. And remember, it's called supplemental security income because the income is meant to supplement other forms of income a client has. SSI is not supposed to be the client's sole source of income, so any kind of income that the client does have, whether earned or unearned, does have to be calculated as part of their SSI payment, and we'll go through some examples of how Social Security looks at that in just a couple minutes. But before we get into the webinar material, I just want to start with my standard announcement. Remember that if you are a VR counselor, which most of you on the line are, CRCs are available for your participation if you need them. So just shoot me an email at Michael, M-I-C-H-A-E-L, .klinger, K-L-I-N-G-E-R, at dars.virginia.gov at the end of the meeting, and I will go ahead and make sure those get logged in for you. Also, this training is going to be recorded and archived for you to listen to later if you need to, as well as all the other follow-up trainings. All right, so the first slide just has to do with what a client's reporting responsibilities are when they go to work or they have other income. And I give you some examples of different methods they could use to report that income. So when a beneficiary is receiving SSI and they have income, whether they're working or it's unearned income, they need to report that income to Social Security within the first 6 days of the month prior to the month they received it. So for example, if a client earned income in August, since today is the 6th of September, they would have to report that income today. And Social Security would use that income report to determine what the client's payment should be in the next month. There's a couple different ways that a client can report income, whether they have unearned income or wages. And I recommend either reporting in person, if at all possible. When a person goes into their local field office, Social Security is required to provide them a receipt just to document that they did report the wages. They can also report by certified mail. That's always a good method because Social Security has to sign that they received the wage report, and the client could use that for documentation, that receipt. Fax, obviously, if they're faxing in the wages, the client has a fax log that the fax went through. And there's a brand new method. I don't know if you guys have heard about this, but just within the past 2 months, Social Security has made it so that a client can report their wages online at their myssa.gov account. And when they do that, at the end of the wage report, they will get a receipt showing that they did report. Now, when I was doing direct services, I had a lot of clients who would come in to me with overpayment letters. And then when I asked them if they reported, they said, yeah, I called the 1-800 number or I reported over the phone. I never recommend that a client does that because there have been a lot of instances in the past where a client makes a telephone report and it doesn't get documented correctly and the client has an overpayment. It's very important, I think, for the client to notify Social Security of their wages in writing and then have a paper trail to document that they did report in case it's ever questions. And then, of course, the client should keep any receipt that Social Security gets them or gives them as a response to that report and any correspondence they receive from Social Security in response to that report. So usually what will happen is a client will report their income and then Social Security will say, all right, we'll follow up with you. And then the client will get a letter saying, okay, you reported your wages on X date and your SSI payment will be X. And that correspondence can be used also as documentation that they reported if it's ever questioned. and it helps the client to cut down on some of those overpayment issues just by having a paper trail. So the first form of income that Social Security looks at in determining a client's SSI payment is whether or not they have any unearned income. And quite simply, unearned income is just anything that is not wages. I'll give you some examples here: a pension, a VA benefit. They might have Social Security disability insurance. Well, that's not earned income. That could impact the amount of an SSI supplement the person receives. And the calculation for how Social Security counts that is very simple. They don't count the first $20 of any unearned income that a client receives. And then whatever the remainder of the unearned income is after they take off that $20 exclusion, they call that a general income exclusion. The remainder of that is deducted from the client's current SSI check. And then the remainder is what a client's SSI check is for the month. And I've given you an example on the next slide. So let's just take the example of Jane. She lives alone and receives the full SSI rate of $750. And she becomes insured for SSDI because let's say she's working and she begins to receive an SSDI benefit of $500 per month. So Social Security does not count the first $20 of her SSDI benefit. So she's entitled to $270 in SSI, and this is how they work it. They look at the $500 she has coming in for SSDI, and by the way, that's always a gross payment before any deductions for anything else. They always look at the gross benefit, so she's at $500 in SSDI. They don't count the first $20 of that, so out of the 500, 480 is countable in terms of her SSI payment. And so what they'll do then is take the $750 SSI payment that she was entitled to before, they'll subtract the $480 SSDI payment as an earned income, and that gives a remainder of $270. And so that's how much SSI she would be entitled to for the month once they figure in her $500 payment in SSI. Pretty easy, straightforward formula. Just remember, whenever anybody has unearned income that's not wages, all but $20 counts against that SSI check. If a person has wages, it's looked at a little bit differently. They're allowed to make a little bit more money before their benefits are impacted a great deal. So again, like with unearned income, Social Security will always look at the gross earned income that a client has coming in for the month. And that's obviously any income before any deductions for taxes or retirement withholding or anything like that. It's always going to be gross. So they don't count the first $65 of the client's wages for the month in determining their SSI payment. They call that a general income exclusion. And then Social Security will also disregard 1/2 of the remaining wages that they don't count in determining the SSI payment. So essentially, what Social Security is doing here is, even though they're looking at the gross earned income, they're looking at less than half of what the client actually has coming in when they're determining their SSI rate. So after they apply the $65 exclusion and they discount 1/2 of the remainder of the income that is left is deducted from the client's current SSI rate, and then the balance of that is the client's new SSI check. And I've given you an example on the next slide. Let's take the example of John. He's on SSI. Let's say he was getting the full $750 per month SSI payment before he began working. Now he gets a job, let's say with DAR's help, and now he's making $1,000 per month. All that they're going to look at is $292.50 is what his SSI payment is going to be. And here's how they exclude that. They don't count the first $1,000 in wages. They don't count the first $85. Because this client has no unearned income, what they're going to do is take that $20 they would have taken off the unearned income and apply it to the 65. So it's the 65 general income exclusion plus the $20 unearned income exclusion. So the client has $1,000 in wages. Social Security automatically disregards the first 85 of that. That brings down his countable income to 915. And then they're going to take that 915 and divide it in half, which is $457.50 is what's left in his countable income. So what they'll do then is the final step is take the base SSI rate that he was getting before he was working, which is the 750, and minus the countable income of $457.50. That's how they get the 292. And the 292 is what the client would be entitled to in SSI for that month if they're working, earning more than $1,000 a month. And so you can see that even though the SSI goes down a little bit when the client goes to work, financially they're still coming out ahead because they're making more money in their job than they would have on benefits alone. Next slide just has a couple important reminders. Income is counted for SSI purposes in the month that it's received. So there could be some months that are longer that maybe have an extra pay period in them. So in those months, the SSI payment is going to be a little bit lower because if they're getting an extra check in a month, they've got more money coming in, their SSI payment is going to be reduced based on that extra income for the month, and they need to plan for that accordingly. So let's say, for example, August is a 3-pay period month. That's going to impact the benefits for the October check. Mentioned this on the last slide, but if the client has no unearned income, the $20 that the client would have had excluded in unearned income is added to the $65 earned income exclusion. So if a client's working no other income other than wages, Social Security doesn't count the first 85 of that. And then income received will impact SSI 2 months later. So for example, in January, if a client earns income, it's going to be impacted on or reflected in the check that they get on March 1st. So the income that a client earns in a month doesn't always impact the benefit for the next month. Usually it takes a couple months for Social Security to catch up with that, make the adjustments in the check. So usually income received in a month will impact the benefits 2 months later, which is pretty good for the client, because if they have a work incentive specialist advocate maybe that they're working with that can talk to them a little bit about the importance of reporting income and the importance of reporting income timely, and that knows the rules, they can kind of help the client prepare that, hey, you're starting to work this month. Let's plan in 2 months that your benefits are going to be impacted. So AWISA, with the knowledge of the rules and regs, can kind of help the client prepare for those changes that are going to result in that they're going to work. Some more important reminders: if a client has both earned and unearned income, the 1/2 of the remainder applies to the earned income only. So again, Social Security is going to count all but $20 of the client's unearned income, but if they have wages, then they are going to disregard 1/2 of the wages only. People on SSI can earn more than $1,180 a month and still be eligible for SSI. If you were with me during the webinar last week, we talked a little bit about what a person could make and still be eligible for benefits. Once a person is found eligible for SSI, that SGA figure, that substantial gainful activity figure, is no longer a factor, and they can actually work and earn more money they can work and earn up to $1,585 per month before the SSI payment is reduced to zero. So just because somebody's making over SGA doesn't necessarily mean that they can't still get SSI benefits. The rules are a little bit different once they're found eligible for benefits. And then people who are on SSI are always better off financially working than on benefits alone, because as we talked about last week, people who are on SSI are living at the poverty level. And one of the biggest benefits of what we're doing with the WISA program and Work World, I'm sure a lot of you are familiar with that and you have utilized it with your clients, but the Work World will actually give numerical results of what can happen to a client's benefits as they go to work and increase their hours or get a raise, so forth. And a lot of the time, clients are very reluctant on SSI to work because they're afraid that if they do, they automatically are going to lose all their benefits. Sometimes they have been in situations where they've had to appeal and it's taken years for them to get their benefits, and they are very leery in giving up that check. One of the benefits of the Work World and working with the WISAs is that the WISA can go ahead and put in different scenarios and show the client what their financial picture is going to be at various levels of earnings. And then at the end of the analysis, they get the numerical results printed out that shows what their financial bottom line is. So instead of the client just looking at it as, if I go to work, I'm going to lose my SSI benefits, they have more of an incentive to work because they can actually see in black and white that they're going to have more money coming in than they do on benefits alone. Now, if a client has an opportunity to go to work and work full-time, maybe earn $2,000 or $2,500 a month, yeah, they might have to give up that SSI benefit, but it's a lot higher than $750 a month. And once a client understands that they can work more, it alleviates a lot of the fear in going back to work and giving up those benefits because they can see the incentive of the work. And this is going to be a shorter webinar because I don't have as many slides as I had last week. Basically, what I wanted to go through with you is the earned and unearned income calculations and explain to you how Social Security counts the income. So what I'd like to do now is open it up for questions. And I'm just going to go ahead and see if I can take you all off mute here. Let me get my control panel back up. Just bear with me for one moment. Here we go. I found it. Okay, I'm going to go ahead and unmute the lines so you can either speak a question if you have one, or you can type in the chat box. Whatever you like.
Can you hear me okay?
Yeah, I can hear you. Go ahead.
My first question, it kind of connects last week's and this week's presentation. I want to make sure I understand. So someone can apply for SSI if they are, no, excuse me, they cannot apply for SSI if they are making more than $1,180 a month. But once they're on SSI, that's not a problem, and they can make up to the $1,500 figure. Is that correct?
That's right. Yep. And that figure assumes that they're entitled to the full rate of $750 and that they have no other income other than wages. But yeah, as a general rule, it's about $1,585. But yeah, you can hit it right on the head.
Okay. And then my other question is, I know that there's $20 allowance that they're giving for unearned income. Is that unearned income as a whole chunk, or is it $20 that they get for each source of unearned income?
Oh, that's a great question. So it's a one-time exclusion only per month. So it doesn't matter how many sources of unearned income they have, the $20 exclusion only applies once a month.
Okay. Thank you.
Sure. Anybody else have any questions, concerns, comments?
Michael, I'm sorry, this is Linda. I do have two quick questions.
Sure.
The first one is in regards to the deductible for whether it be earned or unearned income. So my understanding is that as long as the individual is making under $1,585, they will always have at least either $65 or $85 in SSI coming to them?
Well, they would always have that income exclusion applicable to their income. If they're making less than $1,585 and they have no other income other than wages, they're going to at least have $1 in SSI. So that exclusion will always apply to their income calculation as long as they're making under the $1,585.
Okay, and then I know that when I was working with AWISA, they had tried to simplify it by saying basically for every $2 earned, you lose $1 of income. Is that a good way to interpret it, or just stick with the very specifics of this?
Yeah, so either or, as a general rule, that's true. The SSI payment does go down $1 for every 2 that the client earns. So that would be a good way to explain it.
Okay, and then my last question is in regards to, and we again may have covered this last time, but just trying to connect it all, is so a lot of my clients get concerned because I could explain to them that they will make more money working and receiving SSI, but then their concern is if they go full-time, lose their SSI, how difficult it is to get SSI again if they lose their job.
So I'm going to be talking a little bit about some of the work incentives that protect that in a couple weeks and how people can get their benefits reinstated, but I can just go ahead and cover it briefly here. So the general rule is that if a person loses their SSI due to wages, they can get the benefits reinstated within 12 months, as long as it hasn't been more than 12 months since they got a payment, without a new application. So if, let's say, for example, somebody works for 6 months and the job doesn't work out, they have to quit, or maybe they reduce their hours and they don't have as much money coming in, all they need to do, as long as they've got a payment within the last 12 months, is report that income change to Social Security and their benefits will be reinstated without a new application.
Okay, great. That was helpful. Thank you.
Yeah, sure. And I'll talk more about that in detail in the webinar on SSI work incentives.
Okay.
We'll talk about that further.
This is Anne-Marie again from the Charlottesville office. I just want to return to a question to rephrase a little bit to make sure I absolutely understand, because someone very seasoned in our office gave me some information that I thought was wrong. That person told me that someone cannot be making any money when applying for SSI. And my question was, they can't be making over $1,800, but is it okay if they're making under $1,800?
Yeah, absolutely. 1,180 is kind of like the benchmark that Social Security uses to determine whether or not a client meets their eligibility criteria. So as long as they're not making over that, they could still potentially be eligible for SSI. So they could work part-time, you know, have maybe $700 or $800 coming in, and that's fine. You know, maybe that would be even better because they can go back to Social Security and say, well, yeah, hey, I'm working, but I'm only capable of working part-time because of my disabilities. And so I need SSI to kind of supplement my income. You know, as long as the client can show that they're not capable of working at a substantial level, they can still be eligible for benefits. So I think, you know, if somebody's saying to you they can't work at all, that's bad advice.
I thought so, but someone who's been there a while says that I need to kind of check it out. So I appreciate that. Thank you.
Sure. Anybody else? I'm going to go ahead and unmute all the lines again if anybody has any questions. Now, I know I kind of went through this very, very quickly, but I've been doing this for almost 15 years. And so sometimes it's hard for me to remember that not everybody else knows this stuff as well as I do. So sometimes I might go a little fast or any, but if you do need clarification on something, you know, please ask. I know it seemed like a lot of information coming at you at once.
Well, he has it. He just hasn't done his part to go and find out what the doctor.
Okay, I'm going to go ahead and put everybody on mute because I'm hearing some background noise, but if you have any other questions, go ahead and type them into the chat box. I'd be glad to answer any that you have. All right, if there are no other questions, we will end for today. Again, if you need CRCs, make sure you email me. I will get those logged in for you. Next week's webinar is going to be about how Social Security counts income if a person gets SSDI and how they look at that. And also, I'm going to be talking to you a little bit about overpayments and some of the appeal rights that a client has when they receive an overpayment letter and what they can do to address that. But of course, if you have any other questions about this webinar or any of the other material we covered so far between now and then, just feel free to reach out by email or phone. You can call me. My phone number is 804-245-5593. So if you have any questions or concerns that come up between now and next week, please don't hesitate to reach out. I'm here to help and be glad to answer any questions you have. All right. Thank you for your time, attendance, and participation today. Have a great week, and hopefully you'll be able to join me next week. Take care. Bye-bye.